Watch a couple of videos of my channel and you'll see that I love to use, screeners, tools, basically anything that makes my decision making process a bit faster and a bit easier. And I found a new option screener that is actually free that someone sent me, and I wanted to, give it a shout out because I think it's actually really cool what he's done. He's actually a software developer who did this and is completely free to use, which I think is really cool. So in this video, I'm going to walk you through it and see how we can basically use that option screener so as to find maybe trade ideas, because that's mainly the whole thing. I make so many trades on a yearly basis that at some point, it's kind of hard to find inspiration, to find trade ideas. And that's where this type of tools can actually come quite handy, because now you have option trades that are being suggested to you, which I think is really the best feature for any option screener. It's about trying to find trade ideas that fit your criteria, what you said, what you wanted to see. So as I said, it makes your decision making process easier and faster in the end. Okay, so enough talking, let's get into it. So the option screener is called freeoptionscreener.com. I think you couldn't find a simpler name for that option screener. And when you arrive on the page, you basically have like all those different filters, and you have like two tabs, one for calls and puts and one for credit spreads. So the first thing to mention is that you have the option type that is right there, meaning that whatever you're going to select, either calls or puts, is going to show you either calls or puts, what you chose, like quite self-explanatory. Then you have the expiration type that you have. So personally, I would tend to focus only on monthly options. Like I tend to use more often monthly option, and the very simple reason is that there's more liquidity, there is more volume in monthly options, so it makes more sense to actually get in there compared to weekly options, where I found that sometimes there's a bit of a lack of liquidity. And usually I feel like the pricing is also better in monthly option. That's why if I had to choose one, that would be the monthly option. So for example, I chose put so far and monthly options. So now the screener is only going to show me put options and on monthly expirations. Then after that, the next filter that you have is about the underlying type. So you can choose either if you want only stocks or just ETFs, or maybe any, like both is fine. So personally, I'm fine with both. So let's go for that. Then we have the in the money or at the money option. So what's interesting is that obviously when you're selling options, you can either choose, to either sell at the money options or in the money options. I personally don't know a lot of people who are going to sell in the money options, but that's something that you can also do. Personally, I think that I've never actually sold in the money options. I think that I always sold out the money options. And that's why, for example, I'm going to go for the out the money option. So it's already selected. I'm just going to leave that there. And then after that, we have on the other side, the underlying price. So the underlying price is quite interesting. I think it's quite an important filter, because very often what you're going to see is that the more expensive the stock, the more expensive the options. And so the more the expensive the options, for example, when you buy or sell them, so the more capital you're going to need to have. That's why the first thing that I did when I started with options is to basically create a watch list of cheap stocks that I could basically trade over and over, and they would have cheap options that wouldn't require a lot of capital. And I think that's a very, very important thing to do, especially if you don't have a lot of capital. So that's why in the underlying price, we could say, for example, any stock that is between $20 and let's say $75. I think you have plenty of great stocks that are quite cheap. You don't need to necessarily go for like the Apples or Amazon or Teslas that are super expensive, where you're going to have a lot of capital. Why don't you go for cheaper stocks where it requires less capital, so you can actually make more trades? It's not going to eat up as much of capital as if you were going to go for a more expensive stock. Then we have the days to expiration. So for that, I would tend to, for example, go for anything between 0 and it says 77 days to expiration. That is basically going to encompass, as we talk about monthly option, is going to encompass, let's say, the first monthly option that is coming and the next one. So now that would be, for example, the December expiration that is coming and the January expiration. So that would actually be how I trade myself in the real world, meaning that I'm going to go look for the next monthly expiration that comes, and if I don't like it, I might go for the next one that is just the one after. So that would basically encompass between 0 DT and 77 DTs. That would encompass the 2 monthly expiration. Then we have the strike, as we can see. So in that one, I basically suggest to just put all the strikes as the maximum of the underlying price. So for example, as we have the underlying price that goes between 20 and 75, so let's say that I'm just going to go for 75. The thing is, with the strike price, as we only focus on at the money options, then you're just going to be suggested a lot of options that are at the money anyway, so you don't have to really put a lot of focus on the strike, I feel, because it's just going to suggest you only out the money options anyway. Something that is extremely important, and this one I cannot like emphasize enough, it's the open interest. You know, if you've been watching my channel for a while, you know that I love the open interest. So the open interest, for those who wouldn't know, it's a liquidity measure, it's a liquidity metric. It counts the number of contracts that are currently being held right now. If you, for example, see for a strike that it has an open interest of, let's say, 200, then there are 200 contracts currently being held right now. And the bigger the open interest, the more liquidity there is going to be. So ideally, you know, if you can choose between a strike that has a very low open interest and a very high one, then you should go for the high one because there is more liquidity. And because there is more liquidity, then you're going to get filled at a better price. And especially when you want to get out of your trade with your profits, it's a lot better to have liquidity. Like, trust me, I know what I'm saying here. I like to stick to strikes that have a minimum of, let's say, 600. That's personally what I'm comfortable with. Like, I wouldn't be like super comfortable, for example, trading a strike that has an open interest of, let's say, 55, let's say, you know. But minimum 600, you know that you're going to get filled at good prices. Most of the time, you're not going to have a problem if you focus on strikes with an open interest of minimum 600. Then we have the option volume. You can see that we have the option volume here. So the option volume is also a liquidity measure. I mean, exactly like the open interest, it's just a different way. Like, the option volume counts the number of transactions that have been happening. It's going to usually be a lot more because the volume is going to count the number of transactions back and forth. So you're going to have a lot more volume. You could also use that one. Personally, like, I'm just going to stick to the open interest that is going to filter things anyway. And I also tend to use the open interest more as a liquidity measure compared to the option volume. But, you know, you do whatever you want. Then after that, we have the delta. So this one is also quite interesting, but I personally suggest you to maybe leave that one to the default values because you're going to be able to see after that how out the money or how in the money, depending on what you chose. You can actually see that directly from the results. So personally, I would tend to use that one actually untouched to see which one after that, which suggestion is the best for me. Because depending on the, for example, the stock and the option that they're suggesting, I might go for further out the money or further in the money. So I'm not going to touch that one. I'm going to leave it as it is. Then after that, like, you have the selling premium box where basically, like, you see that there is an explanation below. Premium received when selling is above $40, and then you have the premium paid when buying is under $300. So that filter is going to filter like the premium of the options, meaning that if you, for example, set it up to, let's say, 40, then it's only going to show options with a premium that is minimum 40 cents or $40. As one contract controls 100 shares, then if the option premium is 40 cents, then the actual value is $40. That's the $40 that you see. If you, for example, let's say put $90, then the option premium will be minimum 90 cents or $90. I think that's one of the most interesting filters because now you can filter the premium that you want to have. And let's say that you only want to focus on stocks where you can get $1 or more, then, you know, you can just put it to, let's say, $1. I don't know why there is the Apple thing that shows, but, or let's say $95, and then it's only going to show you premiums that are above $95 or $95, which is pretty useful. Now that we've seen all the different filters and that we've set it up how we wanted it to be, you can actually save the preset by just clicking on save, and then you can rename it, like for example, let's say for a test or something, whatever it is. And then after that, you can always come back to it by clicking on the screener preset, which is pretty useful. If we go down and we start looking at the results, we see all the results from the different filters. So you see that there is a lot of things. So basically what it shows all the different options that match all the filters that we've put. For example, the premium is going to be $95 minimum as we decided before. It's only, for example, going to show monthly expirations, only puts, only underlyings that are between $20 and $75 with an open interest of minimum 600. So it's liquid. So you can see that there are a lot of filters, and now it's showing you all of this. So for example, the first one that you can see is that you have the stock ITCI for the January 21, 2022 option. For the $30 put, you basically add the money by 31%, and the volume is of around 100, but the open is of 1,000. And you have a bid and an ask of around $1, $1.60. So right now, just jump into TestraRock to check out ITCI. So you can see that the 30 strike, indeed, if I decide to sell that option, I have an open interest of around 1,000. So you actually get quite a good premium for a stock that is around $43. So of course, after that, it's the biotech sector. So those stocks tend to be very volatile and tend to have like bigger premiums because you can expect more from them. But you know, that just gives you an idea for a trade if you want to to place a trade and you don't have any inspiration, which is exactly the goal of that screener. Something that I haven't mentioned is that you can see that you have like all the different columns. You can click on the different boxes to basically see what you want to see. I mean, that's pretty self-explanatory. If you don't want to see like the volume, for example, I'm not really interested in the volume, so I'm going to take it out. I'm quite interested in delta, but not necessarily gamma or vega, or not necessarily the implied volatility. I just want to keep it quite simple and make sure that I have like the most important information. And I'm going to actually take away the open interest because I know that there is liquidity in each and every single of those options because of the filter that I put on for the 600 open interest minimum. So I don't really need to see it. And now it's actually, I feel like a lot clearer for me at least. And you can see that you have like the, you can actually filter from the add the money or in the money filter. And as we only chose the add the money options, if you remember, here we only chose out the money, then it's only going to show out the money options anyway. So if I re-click on it to have the biggest first, then we're going to see the different out the money, or you can see in percentage actually for each and every single line. So it says that it's around 30% out the money or 20% out the money. And the smaller the percentage, the closer it is to the out the money strike. So that's quite important to mention. For example, we have like, let's say if we filtered by the out the money, we have this option on GDS. So GDS for the 40 strike, the underlying price is around $56, and I would get around $1, $1.25. So that's pretty interesting. So let's check it out in Testworks. Once again, we can see that I'm basically getting around $1 as the platform said, and it has an open interest of around 5,460 in terms of contracts currently being held. So you won't have any problem of liquidity for that stock. After that, I want to be careful also to mention that, you know, if you see biotech stocks, I would really be careful when you trade biotech stocks because they tend to be extremely volatile because of, for example, sanitary reasons like the COVID, like we've had in the past year. You look at stocks that are in that sector, they tend to be really, really volatile. So I would just pay attention twice to the chart of the stock and do you really want to trade the biotech stocks? I know that very often I tend to just back away from biotech stocks because they're too volatile. But know also that you can, for example, decrease the premium that you'd like to receive. So let's say that you want to, let's say, set the bar at around $40 minimum. Now it's going to show you premiums of minimum of $40. So if we click on the bid and ask, we should see around $40 minimum. So you can see that here it is. And now you also have different stocks that appeared. And if you're interested in those stocks and if you find that this is actually quite a good trade to place, then go for it. Something that can be quite cool also is that if you're interested in theta, meaning the time decay, and for those who want to know what the time decay is, every day that passes, options tend to lose a tiny bit of value. And the closer you are to expiration, the bigger that amount. What you can do is filter by theta, and is going to show you the options that are losing the most on a daily basis, which can be like quite interesting if you want to check that out, because maybe that can be worth checking the option, for example, on S that is losing that amount of value on a daily basis. If you want to focus on, for example, options that tend to lose more money first, that can also be a way to trade. Also, I want to point out that there are already some presets that are being already done on the platform. There's a cash secured put for a small account and a cash secured put for a bigger account. Let's say that we check out for the small account one. Now you already have the presets for the small accounts for cash secured put. So you can see that quite interestingly, we only have like 14-day to expirations, which is not ideal for me, and it's only weekly. So you can have some different inspiration based on the different filters that you choose. The link will be in the description of the video, of course, if you want to check it out. Let me know what you think of the screener in the comment section. I'd be curious to hear your thoughts. Please make good and informed decisions. I'll see you in the next video, and in the meantime, I wish you all the best.